Asian stocks ended higher. Chinese blue chips staged a late rally after the government unveiled a series of steps to underpin the property sector, which weighed on overall economic growth. Hong Kong's Hang Seng gained 0.9%. Mainland China's Shanghai index rose 1%, and Japan's Nikkei dropped 0.3%. The Dow Jones yesterday reached an all-time high of 40,000 for the first time. U.S. stocks were boosted as investor hopes for interest rate cuts by the Federal Reserve were buoyed by data showing inflation slowing down as well as strong corporate earnings results. Data yesterday showed the number of Americans filing new claims for jobless benefits fell last week. S&P 500 lost 0.2%. The Nasdaq Composite slipped by 0.25%, and the Dow Jones ending the session flat. To give us more perspective on the markets and help us look back at the week that was, we are joined by Patrice Rousseau, who's the Chief Investment Officer at Ashburton. Patrice, thank you so much for your time. As we wrap up the week, how would you characterize market sentiment and performance?
Yes, good afternoon, Nastasia, and to the SABC viewers. Yes, a very strong streak by the JSE. We've seen until today 17 days of gains out of the last 20 sessions. Really strong month from the JSE after a very tepid first quarter. A bit of a pullback today, 0.5% down, to be expected, as you've already mentioned, with the a pullback from the US. But I think the news from China remains very positive. We saw some data releases this morning with industrial production up close to 6%, beating expectations. Although below the hood, if you look at the Chinese consumer and retail sales still under pressure, that was a lukewarm up 2% for the beginning of the year. And the Chinese property market also under pressure. The residential sales down over 30% year to date. So mixed bag, but I think the market is taking a bit of comfort from the fact that there's going to be some policy intervention in China to boost the housing market and housing sales, which should translate into better numbers in terms of demand for commodities, and drive perhaps our resources sector higher on the JSE.
When you look back at the week, is there a particular theme that caught your attention?
Apart from the fact that resources have been very strong, we've also had some tech earnings, so results from Tencent were extremely strong for the quarter. That boosted Naspers, and I think there's a further boost from Naspers with the appointment, Naspers process of a new CEO, Fabricio Bloisi, who's from the LATAM business. He was the CEO of iFood and Movile, which is a mobile internet company in Latin America. So that is also positive. I mean, they were on a search for a CEO, so that's a good theme. And another theme, even though the share price is down slightly today, another theme is with the results release of quarter four sales from Richmond, also appointing a new CEO there from within the group, Nicholas Boss. So he had run one of the brands, Van Cleef and Arpels, which had a very strong performance, and also reducing the reliance on the chairman, Johan Rupert. So they are market taking that more positively, and the share price also rebounding 5% today. So we're seeing a few changes in leadership, and overall quite a positive sentiment from the JSE, driven by positive global growth numbers, and also the day before positive CPI releases from the US, which would tend to hint to maybe a Fed being more dovish.
Let's stay with corporate news for a bit. I mean, on Monday, we've got results coming out from Netcare and Famous Brands. If you had to pick one of the two companies, what would you be looking out for in their earnings?
Yes, with Netcare, I think while the whole hospital sector has been, there's been a lot of focus obviously with the president announcing the signing of the NHI bill. If you look at numbers, Netcare, we can compare now the trading update. We're seeing slightly better performance from Netcare, even though the top line growth at 4% is pretty lackluster. I think you talk about results on Monday, expecting earnings to grow around 7. And again, that would be positive, driven by some improvement in EBITDA margins from the hospitals and pharmacy sector. So it's one where the share has been also sustained by share buybacks. They've done 260 million of share buybacks. So numbers should be decent. If you think about how SA Inc. has been beaten up. So again, we're expecting positive reaction there.
Let's talk Fed, the theme around the Federal Reserve, that is. I mean, in terms of the 2% inflation target, given the data we've received so far, how confident are you that they can actually get to 2%?
Yeah, it's a very good question, Nastasia. I think if you look at the latest print at 3.4, the Fed, it's quite far from the Fed target of 2%. Twofold. There's the headline print at 3.4, but if you look at what they call core inflation, excluding the more cyclical elements, that's trending higher. And the problem here is a big component of the inflation basket relates to rentals. That's about a third of the basket. While rental are coming down, it's still running at 5.3%. So that's quite stubborn. While house prices are coming down in the US, I guess the initial effect is for people, instead of buying a house, they decide to wait and see and rent. But that rental growth needs to basically abate and get within the 2% target for that to be sustainable. And that's quite a bit away from where we are right now. But on the other hand, I think higher interest rates in the US, which has been at over 5%, will start to bite, and we should see an abatement in some of the components in the CPI basket. But that is taking a bit longer than expected. That said, the Federal Reserve Chairman at his last speech has started to hint that it doesn't mean that they will wait for the 2% target before they cut rates. It is possible for them to cut rates if they see that inflation is on its way to 2%. I think the market has seen that quite positive. I think there were concerns that if we have to wait for the 2% target, then we wouldn't see any rate cuts this year. So a bit of a change in stance from the Fed, more dovish, more pragmatic, I would say.
Yeah.
And perhaps hopes that rates will be cut ahead of getting to the 2%.
Patrice, thank you so much for your time. That is Patrice Rasool, who is the Chief Investment Officer at Ashburton.